This is Balance of Power, live from Washington, D.C.
It's the latest test of President Trump's economic policies. Welcome to the Thursday edition of Balance of Power, as the U.S. Treasury holds a multi-billion-dollar auction of 30-year bonds. And it's happening just moments after Chime debuted on Wall Street. Alongside Kailey, Leinz, I'm Mathieu in Washington. Thanks for being with us here on the early edition of Balance of Power. Investors today in the bond market, Kailey, balancing worries about debt and tariffs, among other things, coming out of Washington.
Yeah, the question is going to be, are there demand for longer dated maturities when there are ongoing fiscal concerns about the trajectory of the debt and deficit of the United States, with the one big beautiful bill, of course, still being pushed by Congress and the Senate specifically. An important meeting will happen at the White House later today with Senate leaders like Mike Crapo of the Finance Committee and the Majority Leader John Thune and President Trump to continue to advance that agenda. But as we consider the deficit, President Trump, just speaking at the White House earlier today, suggested he's not going to fire Chairman Powell, but once again encouraged him to cut interest rates, in part to make sure that the debt burden of the United States and those interest payments are not felt so heavily. All
of that while floating the idea of higher auto tariffs as he tries to signing resolutions today to repeal some statewide EV incentives and the gas car ban in California. We're spinning a lot of plates here. We're going to have a live update on the auction. Mike McKee and Ira Jersey are with us. We're also tracking Chime, and we'll be watching that through the day. It had a big pop at the open. We'll see where it goes for the session.
Yeah, it did. It actually opened 59% above the IPO price, which was $27. After opening at $43, we're now just around $39. But let's get a check on that and everything else moving in financial markets right now with Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kailey. Leinz. Indeed, spinning a lot of plates on the business desk today. A lot of moving parts to this market. You mentioned Chime. Let's begin there. We've got the Chime IPO with the stock surging right now, 46.3%. Financial tech firm. First day out, ticker CHYM. By the way, that offering led by Morgan Stanley, Goldman Sachs, and JP Morgan Chase. But the important thing, stock up right now, 45.5% on Chime. We've got that $22 billion sale of 30-year debt, a fresh test on whether spiraling deficits are causing investors to shun the maturity. We'll have more on that coming up for you here on Balance of Power. Equity markets higher, but certainly a lot of bouncing around. Right to the numbers with the S&P now up 12 at 6,034, up by about 0.2%. The Dow up 20, up under 0.1%. The NASDAQ Composite Index up 32. For NASDAQ, that is a gain right now of 0.2%. Your 10-year 4.36%, with the 2-year 3.90%. Gold up $29 the ounce, 33.85, up 0.9%. West Texas Intermediate crude little changed, up under 0.1%. And Bitcoin right now down 1.2%, 107,771 on Bitcoin. Again, Chime Financial trading underway, bears repeating. That stock surging in its first day of trading. Right now, we've got Chime Financial up by 48%. The Boeing crash. Boeing shares down 4.2%, but we are now getting reports that a single passenger survived that fiery crash of the Air India plane today. That according to an Indian minister who is confirming again at least one crash survivor. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Mathieu and Kailey Leinz.
All right, Charlie Pellet in New York, thank you so much. Keeping track of the stock market for us, keeping track of the Treasury market as well, which, as Charlie mentioned, of course, we just saw a 30-year bond auction that actually drew a lower yield than the pre-sale when issued yield, drawing 4.844% on that maturity. The pre-sale yield, Joe, was 4.859%. And as a result, while yields were already lower across the curve today in the aftermath of PPI data and considering other factors, we're seeing another tick lower today on the 30-year in the aftermath of this auction. It appears that the demand question perhaps not as bad as some had feared.
Yeah, that's right. We have two great voices for you to walk us through this auction as it happens before our eyes. Michael McKee is here, Bloomberg International Economics and Policy Correspondent at World Headquarters in New York. We're also joined by Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Ira's going to take a minute to bear down on this. Michael, I'm reminded by the comments on Bloomberg yesterday by Jeffrey Gundlach, Double Line. The quote was, "There's an awareness now that the long-term Treasury bond is not a legitimate flight to quality asset." How does that line hit now that we've seen this number?
Well, apparently Mr. Gundlach wasn't bidding, or other people weren't listening to him, because we stopped through here by more than a basis point. So the bid to cover was stronger than the last time at 2.43. So people are still wanting some duration in U.S. Treasuries. Now, it's hard to put this out as any kind of reaction that requires a safe haven, because there's a lot of news out there, but there isn't anything that would be driving people towards a certain issue of a U.S. Treasury at this point.
All right, so Ira, jump in here. How do you view this takedown, which seems overall to be pretty decent?
Yeah, so our system graded an A. So yeah, one of the highest grades that we've seen for a bond auction in a little while. So to go back to what Michael was just saying, when you look at bid to cover, which is the number of bonds that people want to buy versus the amount on offer, it was actually it was the highest reopening of a the highest during a reopening over the last couple of months, and that's important, because look, the fact is that people do want long duration. There's still a lot of pension funds and other liability managers, so what we call LDI investors, liability driven investors, who need long duration assets, and there's not many other places to go. So people still have to buy treasuries, and there is a concern for sure that there's growing debt burden of the United States is going to make the U.S. debt unsustainable. But that might be true in other assets too, right? So if you go to Germany, for example, they're probably going to be issuing a whole lot of debt as well. Granted, they're coming from a much better starting place in terms of their deficit, but there's a few alternatives that are as liquid as treasuries if you want to buy long-term debt.
Well, Mike, it really speaks to the pushback we've been hearing from the White House. Everybody's talking about when the soft data finally creeps into the hard data, when reality is going to catch up with Donald Trump, when people are going to wake up to how bad things are. It just hasn't happened yet. What needs to happen? The passage of the reconciliation bill, when we can put real numbers on debt?
Well, that will lead to some kind of reaction when you can actually quantify what the debt situation is going to be. But I think what we're talking about here is both ends of the yield curve are not trading necessarily, and Ira can tell me I'm wrong on this, but I don't think they're necessarily trading in terms of the U.S. debt at this point, because as he pointed out, there's an independent demand for duration out there. And then on the short end, at 2-year notes, the Fed basically controls that. It doesn't move around very much if the Fed's not moving rates. It's in the middle where you're going to get the reaction. And we have seen that the belly of the curve on up has gotten cheaper. Yields have risen, but it seems like there's not a lot of direction at the moment, because people don't know where we're going to end up on debt or on tariffs, or where the economy is going to go from here.
Okay. Well, Ira, we graded the auction. Grade Mike McKee. Was he right about that?
Yeah, he certainly was. And what's really interesting, we put out a chart earlier this week in one of our notes about the evolution of yields over the last 2 years. And one of the things that you've noticed is we haven't broken out of any ranges anywhere along the curve, whether it's the 2-year, the 10-year, the 30-year, doesn't matter. We're in the same ranges where we were in 2023. The big difference now, though, is that the 2-year yield is close to the bottom of its range, whereas the 30-year yield is toward the top of the range. So that's the yield curve steepening. Now, that steepening occurs for several different reasons. One is expectations that the Fed is going to cut interest rates, the timing of which and the magnitude of which is still in doubt, but nonetheless, the market is pricing for the Fed to ease at some point over the next 18 months. But then the long end is projecting some of those fiscal fears, but in relationship to the 2-year, right? So we look at this absolute level of 5-year, 30-year yields, and that has to be taken into account that, look, not so long ago, 2-year yields and 30-year yields were exactly the same. Now they're 100 plus basis points apart, right? So you have to consider where all of the points on the curve are to each other, not only the absolute level of yields at any one time.
Still, Ira, you remember the freak out that we saw in the bond market, the yippee reaction, as the president called it, after Liberation Day. Technically, put debt aside for a moment, nothing has actually changed when it comes to the tariffs. They're all about to take effect again, as he said, unilaterally in 1 to 2 weeks. We have reciprocal tariffs that could kick in momentarily in August, the China tariffs. How quickly could we get back to that level of panic?
Well, it could happen pretty quickly, but I do think that the market has repriced, and it has repriced, like I mentioned, in terms of that curve steepening. So there's a couple of things that we have to realize. The reason why we worry about foreign demand is because 10 years ago there was massive foreign demand because our current account deficit was huge and ballooning at the time. Today, that current account deficit has actually shrunk quite a lot, and if it shrinks more because our trade balance gets better with other countries, you'll see foreign demand just decline even further, because one of the big reasons that you see this foreign demand is the recycling of dollars due to the trade imbalance. If that changes, then you have to see more domestic demand for Treasury securities, and that is where you might wind up with somewhat of a repricing, in that people are going to say, okay, look, there's not enough domestic savings in the United States to meet the demand of a growing Treasury market, and because of that, you could wind up seeing in general slightly higher yields, and probably, in my view, was somewhat steeper yield curve over time as well.
And Mike McKee, before we let you go, do you want to note what we heard from President Trump at the White House in regard to the Fed chairman and the Fed's policy stance overall? He reiterated that he's not going to fire Jerome Powell, but looking at the inflation data, he still is of the belief the Fed needs to cut rates by 100 basis points or maybe even 2 full points, in part because he said that would mean we save a bunch of money on interest costs when we consider the federal debt. Does the Fed take that into account at all?
No. You get the same reaction from the Fed to that as if, Kailey, you walked into the bank and said, I want you to cut the interest rate on my credit card because I've spent so much money that I can't afford the interest costs. The bankers would laugh you out. The Fed wouldn't be that rude, but they're not going to pay any attention to the president in that case. I mean, they realize that because rates are high, it is costing the government more money, but it's not their fault. Their job is to control prices and keep prices stable. So they're going to do that above all else, and the collateral damage comes about for other reasons.
All right, Michael McKee, Bloomberg International Economics and Policy Correspondent, as well as Ira Jersey, who covers rates for us at Bloomberg Intelligence. Thank you both so much for joining us. Ira, of course, our chief U.S. interest rate strategist, helping us break down this bond auction, 30-year Treasury bond auction. Specifically, a lot of concern about demand for that maturity, and demand proving to be pretty solid. As a result, yields ticking a little bit lower. We're down 8 basis points on the 30-year to 483 as we speak. But of course, Joe, the demand concerns emanated from concerns over, in part, fiscal policies we were just discussing, and the ultimate cost of the tax package that President Trump is trying hard to push right now through the U.S. Senate, hence a meeting that he's holding at the White House this afternoon.
The idea, if you want permanence when it comes to business tax breaks or even the Trump tax cuts, you got to find the money to pay for that somewhere. And senators seem to think the answer is salt.
Yeah.
Which could be a problem next door in the House.
Exactly. So let's get into this with our political panel. Bloomberg Politics contributors Rick Davis and Jeanne Zaino are with us. Rick, of course, Stonecourt Capital partner and Republican strategist. Jeanne, our Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, when we try to imagine what will take place in that room between Mike Crapo, the finance chairman, and the majority leader, John Thune, and President Trump later today at the White House, what is the message from the president likely to be? Is he going to bless a SALT change, knowing it could take make it much harder for this bill to repass the House?
Yeah, I mean, usually the presidents don't get into too much of the nitty gritty because they know that the deal making on these bills are all interrelated, right? So cuts to that affect what you're going to be able to do with the Medicaid. Medicaid would then affect votes that you would otherwise have on another issue. And so generally they don't get all tangled up in that mess. What he will do is put increasing pressure on Majority Leader Thune to get this bill done before the 4th of July break, because he knows the longer this bill sits around, the more it gets difficult to pass anything. And I think at this stage, the White House will take a bill under any circumstances versus a perfect bill. And the reality is the Senate is making big changes. So the question is, what will pass the House, after they get it out?
Rick reminding us of the old line, time kills deals, Jeanne. The fact of the matter is, if you're a Republican, even from your state of New York, and if you're obsessed with salt, you're still not going to vote for a massive tax hike on Americans, are you? If you vote no for this bill and it doesn't pass, that's what they get.
But the reality is, for people like Mike Lawler or so many of the Republicans in a state like New York, California, Jersey with high taxes, they are voting for a tax increase for their folks anyways, who have been suffering since the issue with salt emerged as a result of 2017. So for them, it doesn't make a difference. They know that they're politically going to be in huge trouble if they don't move forward in salt. And so I do think their threats are very, very real. And, you know, Rick is absolutely right. The longer this bill has stayed in the public eye, and you've seen the senators and representatives go home for holidays. We'll see that again for Juneteenth pretty shortly. You also see that public support for this bill, the more people learn about it, begins to go down. And that's what we've seen in some of the polls. And I think the president is well aware of that, which is why I believe he posted on Truth Social today and then reiterated in his comments his welcoming of Rand Paul, because Rand Paul has been very critical about the border funding for this bill. And President Trump is usually not so welcoming and supportive unless he knows he needs you or he needs to pull you along. So I think he's well aware of what is going on in these polls.
Well, that's not where the president's True Social post stopped today, Rick. We also got an interesting one specifically on the labor market and immigration, where the president said our great farmers and people in the hotel and leisure business have been stating that our very aggressive policy on immigration is taking very good long-time workers away from them, with those jobs being almost impossible to replace. He goes on to say this is not good. Finishes with changes are coming. An admission that labor shortages are resulting from his policy. Rick, therefore, what policy changes do you think we're really likely to see?
You know, it kind of echoes the John McCain comprehensive immigration reform of 2005, right? Which is, hey, maybe we need a guest worker program while we crack down on, people here without permission. So it's really interesting. I mean, rather than approaching this as a comprehensive solution, the president seems really inclined to create controversy along the way. So obviously, at one point, Stephen Miller is at ICE last week telling them they're going to lose their job unless they step up the amount of deportations. At the same time, a week later, Donald Trump says, hey, I know these deportations are hurting farmers and other companies throughout the country. Maybe we ought to find a solution. Well, there's a solution there, right? I mean, it's called a guest worker program. It's been around for 20 years. And I'm not exactly sure if his voters will appreciate it, but it's exactly what we need today.
And history repeats. We should mention it was the congressional baseball game last evening. By the way, Republicans won it again. This evening, the congressional picnic on the South Lawn. We referred to this. Rand Paul's invited. Jeanne, can Donald Trump get work done there? They're going to be on the South Lawn looking at the stands that have been set up for the big parade, maybe a little punch. Can he close the deal tonight?
He's certainly going to try. This is, perfect for Donald Trump. And Joe, I just saw that you showed us that we may see a cancellation due to weather this weekend.
I don't know. There's an isolated report there. I don't know. The fact of the matter is, though, it is going to be stormy and hot and raining, and we've got a lot of people who could be in harm's way. Jeanne, Zaino, Rick Davis, thank you both for the conversation. Kailey, at the moment, the parade is set for 6:30 p.m. Saturday. Good luck getting into Washington.
Yeah, good luck getting into Washington today, tomorrow,
Also
basically
true.
Any day leading up to the parade. Traffic's going to be a nightmare. We'll have more coming up here on Balance of Power on Bloomberg TV and radio. But both for WTI and Brent yesterday, we saw a very big move to the upside, more than 4% on each, in part after the U.S. decision to pull U.S. diplomats essentially out of Baghdad, as well as issue warnings to family members of military members in the Middle East, all feeding into concern of something that might be coming, as there were reports last night that Israel could be ready to strike Iran's nuclear facilities. And that's something that President Trump today, when speaking and answering questions from reporters at the White House, did not necessarily play down, Joe. He suggested there could be massive conflict coming.
That's right. He said it could well happen, knowing, of course, that talks are still set for Sunday. Steve Witkoff will be in Oman, and there could be some posturing ahead of those talks. But this is a precarious moment. And Michael Allen from Beacon Global Strategies was the first to float the idea here on the program when Benjamin Netanyahu came to town that is, in fact, what they were talking about. Michael, we know that President Trump waved off that attack at the time. It's become known since then, at least. Is he going to wave off this one?
I think he might try. I think he sees some benefit right now in holding out the prospect that the Israelis might go for it because he wants to strengthen Steve Witkoff's hand as he goes to Oman this weekend. But when you really start to look at some of the factors that are going Israel's way, today, just this morning, the International Atomic Energy Agency, the UN watchdog group, declared Iran in breach of the Non-Proliferation Treaty. That's the first time in 20 years that this has happened. That is significant around the globe. It's not that I think Israel would be toasted if they were to bomb Iran, but it's sort of more understandable in the aftermath of this than it would be otherwise, especially when you consider that the next step might be to refer this to the UN Security Council, which also would trigger additional sanctions from around the world. And if Iran gets out of the Non-Proliferation Treaty altogether, that could almost be an invitation for Israel to go for it.
Okay, so may provide Israel some cover, but at the same time, wouldn't those very same things you're talking about signal that the U.S. has no real hope of getting a nuclear deal with Iran when Iran is doing such things?
I think it's really, really tough because when you think about enrichment, our position is no enrichment in Iran. Their position is, this is one of our red lines and we can't give it up. And we're talking about a consortium. Could we do nuclear fuel rods somewhere else in the Middle East? And Iran, I think, is basically saying, no, it needs to be inside of our own territory. And I think that's why the talks have foundered so far.
So let's say this happens. Does the U.S. provide logistical support, actual hardware? What would be the relationship? Or do we sit back and watch this happen?
So this is the million-dollar question. Have we turned over already the types of munitions that the Israelis would need? Presumably, they would want the Moab, the mother of all bombs, other bunker busters. They would probably want some refueling help from the United States. But what they really need is what we did the last two times there were missiles and drones going between the two countries. They need the U.S. Navy out there with Aegis destroyers knocking down some of these Iranian incoming. And I don't know if President Trump is ready to do these three things. Now, the Israelis may go for it anyway. They're famously creative and think pager operation and a million other things. So they may not need the bunker buster, or they may have an alternative plan. But these are some big question marks.
Well, and as you bring us back to what we've seen in the past when Iran has sent drones and missiles toward Israel, those were largely intercepted, not just with help of the U.S., but with Jordan as well. So when we consider the potential for Iranian retaliation here, is there some major damage that they actually can successfully inflict, considering they weren't successful in past iterations?
They might be able to get, presumably they would throw a lot more ballistic missiles and whatever into Israel, so it may well hit this time. But I think what they're really worried about, the United States in particular, is would the Iranians hit the Gulf allies of Israel and the United States? What would happen in Saudi Arabia? Remember, they hit Abqaiq last time, the big gigantic oil facility. They've also taken, at least the Houthis have taken shots in the UAE before. So I think the Iranians have signaled, you know what, if we get hit, don't think that it's just coming back at Israel. It may come also to your Gulf allies. So that's a big conflagration right there.
What do you make of the move in Iraq? We're trying to get U.S. personnel out of the way already. What is the target in Iraq that would be of value to Iran?
Well, just any place where there are concentrations of Americans in the Middle East that are within sort of
this
the
is more
gun
symbolic
sites.
Than
it is. We have troops
case, right?
there. We have a bigger American presence, generally speaking. And so I think it's prudent for us to take non-essential personnel and give them the opportunity to leave. But it's it's something that we need to look at. It's a factor. It's a signal for thinking about, well, the United States is starting to take precautionary measures.
Well, and how far in advance do we typically take those? Does that signal that it could be within days what we're talking about here, before Sunday, before Witkoff even gets to Oman to try to deal with things diplomatically?
So I have a feeling that Trump has probably said to the Israelis, let Witkoff go in Sunday, but I think it's very, very soon. You know what? I think the Israelis are also operationally ready. They made a bunch of bombing runs down to hit the Houthi. The way I understand it is they're able to practice some refueling, certainly the distance that it takes to get down there, otherwise get into the nice right formations, have some operational readiness concerns addressed by that operation. So diplomatically, the air defenses being down in Israel, the military in Israel being really ready, you could read into this that something's going to happen soon.
You were Special Assistant for National Security in the George W. Bush administration. Would you be telling the president now that there's still an opportunity for a diplomatic solution or prepare for war?
I would say prepare for war, but that is the moment at which you could have a diplomatic solution when you got really, really close up to the line. So I would never rule it out completely, but I definitely think the United States needs to be thinking through, and apparently we are, what would the second, third order implications be of this type of strike? It would be big. Now, Israel has got a lot of creative ways to go after all these different sites across Iran, so this could be a really multi-day, maybe even multi-week type of operation.
Well, we'll plan to stay in touch with you as things develop. Michael Allen of Beacon Global Strategies, thank you as always for joining us as we continue to track this story for you here on Bloomberg TV and radio. One of just many stories around the world we have our eye on today. We're also watching, of course, a tragedy unfolding in India after a crash of a Boeing 787 Dreamliner with 242 people aboard an Air India flight. More than 200 bodies have been recovered after that aircraft crashed shortly after takeoff en route to London. And we want to get the latest now from Ryan Beene, Bloomberg U.S. Transport Deputy Team Leader, who's here with us on Balance of Power. Ryan, do we have any indication yet, knowing it's obviously very early into the investigation, of what actually went wrong here, what happened?
Unfortunately, no, we do not. This crash is just still hours old. Recovery efforts are underway. The first phase of a major disaster like this is largely dominated by search and rescue efforts. Investigators from the U.S. And from other countries are planning to travel to India to assist with the local authorities and their National Aviation Safety Investigative Team to begin that work. But that's going to still take some time before we really learn what actually happened in this tragedy.
Yeah. Well, we're hearing a lot of speculation, as is often the case, Ryan. The President of the United States, even at a podium a short time ago, suggested some sort of engine failure. And there are eyes on Boeing. There are eyes on GE with the potential for major implications. Boeing's CEO, though, says the company's team stands ready to support the investigation. I wonder to what extent the NTSB will be involved here, knowing that it happened in another country.
They will be involved. Under Annex 13, the home country where an aircraft crash occurs, they take the lead, but they are supported by their counterparts from countries where aircraft are manufactured and where engines are manufactured. So the NTSB, being the sort of preeminent, global authority on these types of investigations, will absolutely have a role, as will Boeing and as will personnel from General GE, who have said that they're both sending personnel to assist, and they stand ready to help the authorities.
Yeah, we just had headlines crossing the Bloomberg terminal that the CEO of Boeing has spoken to the chair of Air India, saying that Boeing's team stands ready to support the investigation. When we consider this Boeing aircraft specifically, Ryan, knowing all of the difficulty that Boeing has had, specifically with the 737 model after several fatal crashes, and of course the blowout of one part of the aircraft last year on that flight in the U.S., talk to us about the 787. This is obviously a wide-body aircraft. What is its track record? How reliable is this aircraft? Has Boeing had issues with this model in the past?
This aircraft has had heretofore a sterling track record. This is the first fatal accident involving a 787, and this model of aircraft has been on the market for about 15 years. There are over 1,000 in service today. It has, it's a workhorse for global airline fleets connecting international destinations around the world. So this is sort of uncharted territory. Now, the 787 has been under scrutiny for some quality concerns on the part of the FAA in recent years that prompted about a year plus halt to deliveries while Boeing employees reworked elements of the fuselage that the FAA was concerned the work wasn't being properly done on it. But those planes have largely been through that process. Deliveries have resumed, and there has not been a major safety incident involving the plane itself. So this is sort of uncharted territory. And you mentioned Boeing's recent track record and the previous incidents that they've been involved in. This certainly doesn't help what Boeing's trying to do right now, which is get quality under control, resume deliveries, get the cash flow spigot going. We don't know, again, to emphasize, we don't know if there was any issue with this plane whatsoever, or if there are other factors at play here. But it certainly doesn't help the company and CEO Kelly Ortberg in trying to move Boeing beyond the difficult chapter that it's been in for the last several years.
Yeah, the timing is terrible for these companies all the way around. Ryan, thank you so much. Ryan Beene is Bloomberg's U.S. Transport Deputy Team Leader with his eyes on a developing story overseas. I'm Joe Mathieu alongside Kailey Leinz. We'll keep tabs on this as well as the IPO of Chime. The conversation later with Paige Smith, our finance reporter. Consumer finance looming large today on Wall Street. And we'll have more on that straight ahead on Bloomberg.
Yeah, it's 1:40 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on Chime Financial, ticker CHYM. First day of trading and the stock pushing higher. Right now we've got Chime up by 44.8%. The stock opened at 43, just about 59% above the IPO price of $27 each. But Chime right now trading at $38.86. It is up again by 44%.
All right, Charlie Pellet, thank you so much. I'm Kailey Leinz alongside Joe Mathieu for Balance of Power today. And as Charlie checks on Chime for us, of course, doing pretty well on its first day of trading, having already had its IPO priced above the marketed range, opening substantially, about 49% above that price, even if we're trading a little below that level now at $38 a share, as Charlie was just mentioning. But this is just the latest in what have been a series of relatively successful IPOs, thinking back to Circle last week, Joe, and of course, all of it keeping our focus on financial technology in the fintech space.
Really compelling story. The CEO at Chime, Chris Britt, was talking to Ed Ludlow earlier today on Bloomberg TV and radio. Just a fascinating story about how we got here and why there's so much buzz around it. Fee-free banking, payments-driven revenue, and an audience that may not typically be banked, as they say. There's a really interesting trend here with many people who are of lower income, lower means, living paycheck to paycheck, but suddenly have a platform that they can do business on here. And we wanted to talk about it with Paige Smith, Bloomberg's consumer finance reporter, to get a slightly different wrinkle on this story, Paige. A third of the customers are women. What does this tell us about the state of the consumer and its relationship to banking?
I think that's a really good point. This company in particular, which to be clear is not a bank, but offers a heck of a lot of bank-like services to consumers that, like you said, mostly make under $100,000 a year and are turning to this financial technology company as, for things like bread and butter savings accounts and checking accounts and places to put their paycheck. And as you said, it caters to folks that are, maybe would go to a Bank of America, would go to a Wells Fargo, but is actually, they're instead going to Chime.
Well, and to your point about this not being a bank, just a fintech firm that partners with banks in order to offer these services, is there a kind of regulatory risk embedded in this story? Paige, is there a risk that that kind of relationship actually gets more difficult for Chime to execute and specifically make money off of?
Well, I would say, to use Chris Britt's words, he has said repeatedly that the company has prioritized playing by the rules, but, again, they are not a bank. They work very closely with banks. They have two bank partners, Stride and Bancorp Bank, and, these relationships are common in the fintech space, and yes, regulators have looked at them in the past, but they have not looked at Chime in particular, I believe, and this is, it's certainly something to keep in mind, but I would say that, just to be clear, they are not a bank, but they're a fintech that provides bank-like services and works closely with banks.
And they're they're giving the big banks a run for their money here. When you start hearing about Chime in the same conversation as Bank of America or J.P. Morgan Chase, what does that tell us about the potential headroom for this company to grow?
They've said they're eyeing a number of different revenue opportunities, but the company is, as they've made very clear, they're a payments revenue-focused company. So they basically make money every time their customers use their Chime branded credit or debit cards. That's how they make money. It's a little bit different than how your standard Bank of America or Wells Fargo makes money. And as they've said, there's more opportunity to sort of take some of those existing customers away from the biggest banks, but also expand on folks who have maybe never had a relationship with a bank of any kind.
All right, Paige, we appreciate it. Bloomberg consumer finance reporter Paige Smith reporting on Chime's IPO. Again, the debut of trading. It has been trading just under an hour. CHYM is the ticker. We're at $38.75 a share after an IPO, which again priced at the beyond the upper end of the range at $27 a share. So a very healthy debut pop we are seeing for Chime here. And as we keep one eye on the NASDAQ and on Wall Street overall, of course, we're keeping another eye on the happenings here in Washington, including a meeting that will happen at the White House later this afternoon between President Trump and two very important people in the budget reconciliation debate right now, the Senate Majority Leader, John Thune, and the Senate Finance Chairman, Mike Crapo, who, of course, Joe, is charged with making any tweaks to the tax policies and Medicaid policies, specifically of the House-passed reconciliation.
Yeah, all the fun stuff here that's going to upset everyone in the House is going to probably come out of the Senate Finance Committee. So they do have some things to talk about here, and it's great to be joined by somebody who knows a thing or two about this. Patrick McHenry is back with us, Bloomberg Politics contributor, of course, former chair of the House Financial Services Committee, former Speaker Pro Tem. Great to see you.
Great to see you. I'm smiling because, yes, the consternation, the natural tension between the House and the Senate will be highlighted in the coming weeks.
I bet that's right. We've talked about permanence a lot lately, Kailey and I, and whether that's going to tip the cart over. If you make these cuts permanent, you got to find the money somewhere. If it comes out of salt, we're dead in the water. Is the conventional wisdom right here? Or would you be very hard-pressed to find a Republican who votes for a tax hike?
You're hard-pressed to find a Republican for a tax hike, but we've got narrow majorities here. Yeah. You see the tension between the White House and Senator Rand Paul, highlighted that he would otherwise be for a tax cut, but because the debt ceiling's included, he won't play ball. Yeah. That makes it more precarious for the Senate to produce a reasonable tax package. Probably means less tax cuts, in fact, because he's not participating. More spending overall because he's not participating. That's quite frustrating when you're trying to make policy and actually have a more fiscally sound outcome. But I do think you're looking at permanence as a baseline conversation for the Senate. I think that is a net plus. The fact that we have a tax code that's expiring for individuals, and individuals are facing, and small businesses, facing a massive tax increase. Secretary Bessent said it very well before the Congress this week. This could be the largest tax increase in American history. So action is quite necessary for economic growth and economic activity. The debate has gotten become an abstraction from that fact point, which they're trying to draw it back to those really basic principles.
Yeah, and yet the debate has migrated onto very specific, narrow issues like the state and local tax deduction, which affects just a handful of lawmakers in the House who happen to have red districts in a blue state. Mike Johnson was asked when he was leaving the White House about SALT changes, and he says he hopes the Senate changes it in a very small way. How do we translate he'll speak very small way into an actual number? Would reducing that amount by $10,000, for example, be considered very small?
They're going to risk it.
Okay.
The Senate's going to test it. This is a massive. So when you see the scoring, there are two pieces of the debate right now. Is that there is those on the lower end of the scale are going to see their net benefits from government be reduced, and at the top end of the scale, you're going to see a greater tax cut. That is driven around SALT and a debate about Medicaid. If you are working poor and you're not on Medicaid, this is a tax cut for you. If you're receiving Medicaid and you're gaming the system, yes, that's a huge loss. So work requirements are always going to skew as this you're cutting people. What you're saying is if you're able-bodied, you should not be on governmental services. So that becomes a point of debate. The second piece of that is the SALT deduction. a SALT deduction has the greatest impact on the higher end of the distribution for high-income individuals in blue states. The reason why we have the SALT deduction at $10,000, capped at $10,000 for the first time in American history, is because in 2017, Republicans had sufficient votes to go beyond blue state Republicans in the House. This time around, that is not the case. The Republican majority in the House is driven out of Republicans from New Jersey and New York. Without them, Hakeem Jeffries is Speaker of the House, not Mike Johnson. So they do have a serious role here. The Senate cares not one whit
and
about
they've let us know
this
it.
debate.
Yes, they have.
So the tension here is going to be a lot of performative acts around what is actually going to happen. I think we can fast forward here. This is going to be basically the House trying to be the sheepdog to steer the Senate to a package that the House will consume and pass and put to the president's desk. That is actually what we're hearing here between congressional leaders.
The House as sheepdog, not the Senate jamming the House.
Well, this is assuming the jam, and trying to
assume the jam,
trying to
limit the jam,
trying to massage the product,
massage the jam,
such that you can consume the jam.
Okay.
Wow,
this
has gotten out of hand.
I like this a lot. No, all right, but
this is much more a Friday afternoon conversation.
Yes, let's
I'm
make
sorry,
it
I'm taking it that way.
Bring us inside the minds of the SALT caucus. You're a member from New York. You're a tough guy. Hell no is what we're hearing. Not a dollar less than $40,000. You dealt with this all the time, though. How much of this is bluster? When you're alone in a room, are we really voting for the tax hike if you bring this down to $30,000? Maybe you're going to tell me yes, because you can't primary them with a MAGA candidate.
Okay, so the difficulty here is if you're a Republican and you're in the New York media market, you're one of the most sound, active politicians you can possibly be. You've been put through a meat grinder. You know what it's like to have the media blaring at you and to be like a unicorn in this space. So they're professional in how they're taking this. They're going to fight for as high a deduction as they possibly can because it benefits their constituents. That's really, and therefore benefits their politics and re-electability.
Sure.
And they are really proficient in how they act. They're sticking together, and they know how to negotiate. So is it going to be $30,000, or is it going to be some number between 30 and 40? We're going to see, but there's going to be a lot of performance between now and then. And a lot of heartache before the vote as well.
Well, and between now and then, there's other legislative efforts underway on the Hill and in the House specifically, where we saw a markup this week of the Clarity Act. This is the long-awaited market structure legislation, an iteration, shall we say, of the FIT 21 Act that passed while you were still in the chamber, trying to delineate authority between the SEC and CFTC here. Some concerns are being raised about this, though, and I wonder how you view the prospects, specifically the prospects of ultimately reconciling it with whatever the Senate would like to do on market structure.
So what French Hill constructed with this market structure bill in the House took what we did last Congress, built on it, refined it. I think it's a better product and much more balanced product than it was last Congress, and durable. I mean, this is a set of policy that can make its way unchanged, signed in law. What we saw with the markup yesterday is that the actions of the Trump family engaged in crypto has made it very difficult for pro-crypto Democratic members to participate in the policymaking here. So you saw complete performative acts around the president's family and their actions in crypto. That was what the whole markup was about. Not about the substance of the policy or some concern about the substance of the policy, but it was all about the politics of Democratic politicians vis-a-vis the president and the president's family. That tells me it's not actually the legislation that's a problem. It's going to be giving Democratic members enough cover that they can actually participate and cast the votes they want to participate. And there are a lot of Democratic members of the House and the Senate that want to do that. Still, we saw 69 Democratic votes in the Senate, very high vote total for the stablecoin bill. I think the pairing of those two is inevitable post-tax bill. And I think those two getting pushed together as a single vote to go to a single bill to the president's desk is the most reasonable outcome of this summer.
So post-tax bill, meaning it happens this fall?
No, I
realistically,
think,
or really before the August recess?
I think what we're going to see is a major push to take the Senate tax bill through the House before 4th of July, and then July becomes crypto month, and the president have a bill at the end of the month.
Wow, we just named July. It's crypto month. Fantastic. Patrick McHenry, thank you so much. I didn't get a chance to ask you what would happen at the congressional dinner tonight at the White House. We'll do that next time you're with us. The great Patrick McHenry, Bloomberg Politics contributor. See you on the late edition of Balance of Power.